The Bank of England policy decision is today, and the market will be looking to see if the central bank has any updates in the aftermath of the convincing victory for Boris Johnson in the UK election. But since the election, the UK PM has ruffled some feathers with the vow to leave the EU come the December 2020 deadline with or without a deal. So, with the door still open to no-deal Brexit, the BOE may not be as inclined to upgrade its outlook so aggressively. At the same time, we have said for many months and continue to say the risk associated with no-deal Brexit is much smaller than what the market has shown, and so much smaller than it was in the nervous months ahead of the election. With that said, it wouldn't be surprising to see the BOE come out with some form of an upgraded outlook, but overall the expectation is for the central bank to remain on hold and stick with a wait-and-see communication. Mark Carney is at the end of his term as well, and we don't see the central bank governor looking to make things any more exciting than they need to be. As much as uncertainty around the political climate has cleared up, the BOE needs to be thinking about a recent dip in wage growth, inflation that could soften further, and not wanting to cause too much of a yield differential advantage after last week's more dovish-leaning Fed decision. It's worth noting there will be no presser or inflation report accompanying today's decision. Bottom line here, look for the Monetary Policy Committee to produce a mildly upgraded outlook while leaving rates at 0.75% where they've been since August of 2018. The market will be looking for a 7-2 vote in favor of no change, with Saunders and Haskell as the dissenters in favor of additional rate cuts. Technically speaking, we have been bullish the pound for quite some time, arguing for the formation of a longer-term bottom after setbacks in 2019 held to support from the aftermath of the EU referendum of 2016. We classify the post-election pullback as a correction, with a higher low sought out ahead of the next upside extension back through last week's 2019 high and eventually towards a retest of the 2018 high up in the 143s. We see strong support in the 128 to 130 area and would only worry about this outlook being compromised on a breakback below 125. That's all for now.